Good day, traders. Welcome to Traders Watch. In today's video, we are going to look at the potential effects of the Ukraine-Russia crisis on the price of the US dollar Russian ruble. Okay, so I have the USD RUB chart from around 1995 up to date. So what we see from these lows here up to around these peaks here in Elliot wave terms, one could be seeing a wave 1, a wave 2, a wave 3, a possible wave 4, and then now we are in a wave 5 to the upside. Okay, so that would be wave 1, wave 2, wave 3, wave 4, and now one could say we are currently in wave 5. Now, with the recent attacks of Russia on Ukraine and imposed sanctions by the economic and otherwise by the US government, we are going to obviously expect a weakening of the Russian currency, the Russian economy, the Russian stocks. So it is my expectation, just based on that news, that the price of the USD RUB pair is just going to shoot and skyrocket upwards. Okay, and this view also seems to be supported by the Elliott wave structures that we are having here. Okay. So one could say that this was a 3-wave pullback in wave 2, and then we have what appears to have been an expanding flat in wave 3. Now, currently in our wave 5, we seem to have had wave 1, wave 2, right? And then we seem also to have a nesting here in our wave 3 of wave 5. So this would be wave 1 in 5, wave 2 in 5, right? And then this nest here could make a probable 1, 2, 3, 4, 5 to mark the completion of our wave 3, right? Then we can have F4 and then F5, which is going to coincide with the end of this wave 5 here in black. All right. So this is the primary wave count that I'm holding on the currency pair so far. We have the wave 1, wave 2, wave 3, wave 4, and currently we're playing out wave 5. And in wave 5, we have this extension here that seems to be taking place. Our wave 1, wave 2, wave 3, which is currently in play, wave 4, and wave 5. So according to the Elliott wave theory, we have 3 golden rules to the Elliott wave theory. So the 3 golden rules is that the first one is that wave 3 cannot be the shortest, right? Wave 3 cannot be the shortest wave in all the 5 waves, right? Wave 3 cannot be the shortest, and also wave 4 is not allowed to overlap wave 1. Like this wave 4 here is not allowed to come into the territory of wave 1. And the last rule is wave 2 cannot retrace all of wave 1. Wave 2 is not allowed to retrace 100% of wave 1. So these are the 3 golden rules to applying the Elliott wave theory and to keep a proper count. Okay, so if we are currently in the middle of a wave So if we are here in the larger degree, in the red degree, if we are currently in the third wave, right? And also in the green degree, we are also in the third wave. So this is a potential wave for a very large move to the upside. And also it's been supported with the current news events. One would like to see exactly how this is going to affect the markets and the price of the RUBLE. All right, so I am personally interested in this pair since the release of the news. And as I'm looking at the chart now, I'm already trying to see if there are any ways that I can position myself to take this trade, because we know that in the green degree, this is our wave one, and this is our wave two. So I would have my invalidation level right at this point. This is where I would want to put my stop loss. Now, all I have to do is just wait after this sharp impulse here. I just want to see a correction in 3 waves, and then I can also jump into this trade here with this as my stop loss. Okay, so I'll be posting the details of how the trade goes. But for now, let's just see if we can position ourselves for that trade there. Okay. Let me just zoom into the 1 hour. Okay. So on the 1 hourly time frame, perhaps the 4 hourly to start with. Right. So on the 4 hourly, this is where our green degree wave 2 is proposed to have ended. So what we see here is a possible wave 3, right? I'm gonna use black. So one could see a possible 1, 2, 3, a 4, possible 5 with an expanding flat correction. So all of these could be your wave 1 in that degree there. This is your wave 2. So now we are in this wave 3 here. Okay, so we seem to be in the third wave of a third wave of a third wave. It's just so powerful at time to be trading the market right now. So if this is my wave 1 and my wave 2, obviously wave 2 didn't come to the territory of this wave, right? But my new invalidation point is this level here, which I've proposed is the end of wave 2. So I wouldn't expect my correction, or the one that's currently building up here, the wave 4, to come to the wave territory of wave 2. Okay. So with that in mind, let's zoom into the 1 hourly time frame. Let's zoom into the 1 hourly time frame. Okay. So this current wave here that is in play, I see it has already made a wave 1, a wave 2, possible wave 3, and this here could be our wave 4, which is currently in play. So let's look at our wave 4. We seem to have had 1, 2, 3 coming down, and we've had 1, 2, 3 waves going up. Now we seem to be having a 1, 2, 3 waves coming down right into the blue box. Okay. If we are to place our fib levels, all right, maybe first of all, the labeling of this structure, since it appears to be a 333, would be a W, an X, and a Y corrective structure. Okay. So if we are to place our fib levels, if we are to place our fibs, would find that the 100% to 138.2% area is right here. Okay, so this is a high probability area for the market to reverse from, right? So if and then the invalidation level should be here, right, at 1.618%. This would disqualify this whole structure as a zigzag, right? It should not extend below the leg Y. The Y leg should not extend below 1.618% termination of wave A. So that's the setup that I have. I'm going to place my buy order at this level, and then I'll place my stop loss at this level. Yeah. But overall, the invalidation level for the whole structure, for the overall count, is at this level here. This is another structural level. So I don't expect the price to come and trade down below this line. Otherwise, that's going to invalidate the whole count that we have here. So for now, we just watch price action around the blue box area with our trade in position. Okay, so that looks like a nice setup to the upside. So this should be the entry level. This should be my stop loss. Okay, and this here can run all the way. It can run all the way up to the proposed end of our wave 5. Okay, but I'm obviously not gonna let the trade run all the way. I'm obviously not gonna let the trade run all the way. If I want to trade the whole of the wave, then perhaps my stop loss should come lower to right at this invalidation point. If you're riding the whole swing from here, then you might want to collect your profits at the termination of the wave 5. Okay, so this is roughly drawn to scale. This is not even the termination of wave 5. This is just the wave 3, the end of the wave 3. Okay, so for now we can run the trade up to the end of wave 3 and then wait for this huge correction and then position ourselves for more entries again around these levels here. So if we are to look at the monthly, this seems to be a very huge move that we are looking at here. This seems to be a very huge move that we are looking at here, because this is roughly about 513,000 pips. And then your stop loss is going to be 78,463 pips. So this seems to me to be a very good risk to reward ratio, but obviously you don't have to trade the whole wave there in one trade. You don't have to trade the whole wave in one trade. I would prefer okay, what's wrong with this? I would prefer to take the trade from here and let it run maybe up to a 1:3 risk to reward. So I would place my trade there. All right, that's all I had for you today, guys. Please trade responsibly, and I'll see you in the next video. Cheers and bye-bye.